So what does the coronavirus have to do with interest rates? Hi, this is Mike Wagner with the Casby Real Estate Group at iPro Real Estate, and I'm here today with Jeremy Plouczek with Superior Lending Group. So tell me, Jeremy, how does a virus in China affect interest rates here in Utah?
So maybe if we backed up a little bit, stocks and bonds trade independent of one another usually. Money will come out of stocks into bonds and out of bonds into stocks. A mortgage is just a bond. It's a mortgage bond. It's tied to a house, just like a municipal bond is tied to a city, or a corporate bond is tied to a company. Mortgages are pooled together and sold. And so when the stock market sees some losses, that money will come out of bonds and out of stocks and into bonds, so that investors keep making money. Now, when you have a scare like a virus in China, or a plane crashes, or any number of global events, right, that travel across the world anymore at the speed of the internet, that freaks out stocks who want to make money, and they say, okay, well, I'm happy with the 3.5% return for the next 30 years. So you see then this virus has got traders kind of freaked out a little bit, and that's pushed more money into the bond market, which has lowered interest rates for our consumers.
Wow, that's incredible that something so, even though it's devastating, you know, it can be beneficial to you. So if you have a home right now that you have your interest rate is in the 4s, it might be a good time to give us a call, and we can get you hooked up with Jeremy about refinancing.
Where values have come up, you know, like they have the last few years. Someone bought a house a year ago and they're even at 4%, and they put 10% down. We can probably get them out of mortgage insurance and get them out of the 4% rate for free, and save them $150, $200 a month forever for free right now.
You can get rid of that mortgage insurance, which is awesome.
Yeah.
I mean, that's like a windfall, right?
Yeah.
That's like having a raise.
Yeah.
And so right now we're up against the selling season. So you want to get pre-qualified right now. I mean, it's the 1st of February. And so the homes are going to start coming on the market, and you want to be pre-qualified and ready to go. The homes that you are going to look at in June are probably going to be worth $5,000, $10,000 more than they are right now. And so, and who knows what the interest rates will be in June, right? So everything seems like it's a perfect storm right now to buy a home and to get into a home if you're looking to. Now, if you're a first-time home buyer, you have programs out there for first-time home buyers.
Yeah, absolutely. There's zero down. There's a few zero down programs through the federal government, through private entities. There's 3% down programs, which are even better if you can muster some money down. That'll help you save a ton of money.
Right, and I think that's kind of a misnomer, because a lot of home buyers or potential home buyers are saying, well, I need to save money before I buy a home, right? But the problem is that the home prices are going up faster than they can save the money.
And it's been that way for the last little bit.
Yeah, and so they may not realize that. And so the best thing to do is to contact us and talk to us about this a little bit, and we can get them hooked up with Jeremy, and he can talk about their situation and find a loan program that's specific for them. I mean, he has so many things and different products that he can do. It's amazing. And if you're renting now, you're just throwing your money away. The best thing to do is to get into a home and start building that equity in the home and saving money on your taxes and all these other things. It's crazy not to. So it's a perfect time to do that. So give us a call and we'll help you out. Thanks.